Hey everybody, welcome back. I've got a lot of comments on just jump right into it, stop at the fancy open, so that's what we're going to start doing. Now, if you can just see, the Head and Shoulders gang finally got what they wanted and we broke. The issue is what happens now. I'm just going to start with the basics. For me, there's a lot of data that's coming out that we're going to go through. We're going to talk about semiconductors, what's going on there, what to look for tomorrow, what to look for tomorrow night, what to look for Thursday, and what to look for on Friday. I think the most interesting thing for me is to just start with the DTL and then clone that DTL. Remember, there's a line there for a reason. And then just kind of drop it in here. And what you're going to note is this. 1, 2, 3, 4. Now, people will say, well, you don't know that's going to hold. You're 100% right. I have no idea that that's going to hold. But you know what else I know? I know no one else is looking at the low end of this channel. So there's a lot to look at here. And there's a lot of people out there that are saying, oh, it's clear we're going to go down. I'm not saying that we're not going to go down, just like I'm not going to tell you that we're going to go up. There is nothing redeeming about this chart. I was very clear about that yesterday. I did think we'd get more than one day of a bounce or a couple hours than a bounce. That's not what happened, obviously. But what I see happening here are a couple things. Number one, we've sliced this. So the idea of testing this level was exactly what needed to be done, and we gap filled. So we have the gap fill, you're here. So what this is, what 4,300 is to us, is a huge spot of convergence. And whenever you have confluence like this, so you have a lower channel right here, you can see how you have a lower channel, meaning that the channel's pointing down lower versus upper when they're going up. And then you come right to that gap fill and you break that low and you sit right there. That is a very specific point. Let's be really clear about this. Breaking 4,300 is bad. Okay, if you take nothing away from this video, and we're going to cover a lot about semis tonight and what's going on in financials, what's going on in REITs, things like that. This is bad. It's really that clear. And it's something that we have to pay attention to and focus on a lot. And, they come for the generals last, which they kind of did today. But is that it for them? I don't know. There's some issues there. You can see how you're rolling down the 12, 22 cross, the 55. This is why once I break a 55, I am pretty much done with the swing trades for long term until I get some kind of wrap on it. I had a bunch of shorts on yesterday, candidly closed a bunch of them, and I'm okay with it. I would not want to be crazily short here for a whole list of reasons. Number one, I'm a big believer in if it's so obvious, then it's obvious. And I don't know that I want to be that guy that's going home short tonight unless you're up a lot in the short. So that's the first thing. I'm just going to be candid. A lot of the shorts I had on today, I was scalping and then I pulled money out and then I got out of the way. The longs that I tried today when I tried to buy fish on breaks that should have worked did not work. That gives me the signal and information that I paid for that this is probably not over, but I don't feel like coming in and stepping into a gap up tomorrow, to be completely candid with you. I'm not saying we're going to. I don't want the risk. We're at a critical level and we held, and that's something I want to pay attention to. Let's look at this on the hourly and look at the level that we're talking about. Now, one of the things that I thought was glaring today, if we drill into this, let's do it this way. We'll drop that into an hour now and we'll talk about this. And we don't have to talk about the volume just now. And we're going to click off this 9. And what we're going to do is just focus on this line, but take a look at what's happening here. You're starting to get some kind of positive divergence. And I look at these. You don't have to, but I do. I look at these and they're significant to me. So that gives me a little bit of pause there, like, okay, we're going to take out a lower low. And then after we take out the lower low, this is what we're going to do. Well, usually that means that there's some kind of bounce out there. Now that bounce could be as something as simplistic to any one of these levels, 44, 34, or it doesn't even have to be that high. It could just be something right around in here where you've hit a couple times. I don't know that I would use this, but that's really pretty obvious, isn't it, when we look at it, that 43.67. And these are not enormous bounces that I'm suggesting. I mean, that's 1%. To bounce to here is obviously 2.5 at this point. But I've got this positive divergence. Then I drill into this on the 4 hour and I look at it. How long do you think you're going to stay under here on a 4 hour? The only thing that usually happens is it gets worse faster. So I'm going to say that again. When the ES is below 30, tries to rally and doesn't on a 4 hour, it gets worse faster. And I think that's what we started seeing today. But if you really look at your option trades, except the people in the comments are going to tell me how great they did with options, we've had some option trades on, and even though we were right on direction and everything, you had to move fast because of the VIX. And we're going to address that and what people are dealing with on the option side right now and the implied volatility and why you're probably struggling with options. So if you take a look at this, we're setting up, here's your neckline, we've broken, you're under. It's that simple. So if I'm under here on a 4-hour, I cannot be going crazy. And I just want to be obvious. I talked about this yesterday. I really appreciate the comments on the research yesterday on Taiwan Semi. And I really appreciate you guys understanding that there are waves within waves. People are actually starting to get it. And right now you're dealing with a very bearish wave and we don't know how bad it's going to get. But when you're here, there's a bounce. Okay? We just don't know when. And that's the point that I'm getting at. We just don't know when that bounce is. You could be here, bounce from here up, and then set up for a short, right? You could bounce here and then set up, go sideways, right? And then you could think you're going to sell off here, but you only come back in. You have to realize these are 4-hour bars. I'm not talking about a complete change. If you need to just understand where you are in the pecking order, right? And there are waves within waves. It is very difficult to look at this and assume that we are not going lower, but at the same time, you have to be aware and very cognizant that there is some kind of bounce out there. And if you think that it's just going to be rosy and you're just going to short just like you did last time, let me be really clear. How you didn't have the Feds back when 2020, when everybody was a genius, as you remember, and we've gone through this, okay, you don't have the Fed's balance sheet coming in on you here either. So when we sold off like this, you had the Fed getting rid of its balance sheet. The Fed's balance sheet is not as big now as it was here. So these kinds of moves are going to dissipate. I'm not saying there can't be some other kind of credit event or anything like that, but let's start being realistic about this, okay? You've already cracked here. Let me clean all this off so you can see. You've cracked here, you're cracking here. We're making the lower low, which is obviously negative. We know this. We can see that we've broken the trend line already. We went through this in Saturday's video. We can see that very clearly, right? If we go to here and we drop in the rate of change, which we've discussed at nauseum, pull that one up and we'll dig into it. I thought I had that one done in here. There it is, boom. Let's go back to the ES here and pop that in. Okay. So then you look at the ES, that's a daily rate of change. You can see that you're accelerating to the downside still with the rate of change. That shouldn't make you feel rosy either. And I'm not talking about what happens in 2 to 3 weeks. Right now, these videos, as you should be aware, these videos are to get you through tomorrow or the next couple days and to inform you and educate you on what was done today and how you could have profited from it and what you can do about it tomorrow. The weekend videos are more long-term, and we follow those through for the week. So I hope that makes sense to everybody. Now, you have a lower low right here. You took a lower low right here as well. This is getting worse. It's not getting better. But that does not mean that if you go take a look at the hourly chart and you see how this is playing out when we start looking at the oversold, you're still oversold. If you come here and you start looking at the rate of change, you see how the rate of change is here and it's lower than it is here? Well, even that's telling you that the rate of change in the short term is dwindling. Well, if the rate of change, walk me through this. If the rate of change, right, at which the rate of change, something is actually changing, is dwindling, how is this going to accelerate? Okay, when you understand what this stuff is, you can start making more informed decisions. And I'd love to hear your comments because can you gap down? Of course you can. There can always be a news-driven event. But if the dollar going to 106 and bonds going up and the most you're going to give me is a 1.5 today on the ES, 1.5% down, I mean, when is this going to get worse? And I think you're too oversold for it to get that much worse right now. And that's one of the reasons why I really didn't want to carry a lot in. If you go through this and you look at NQ, and we're going to go through a couple others as well. I want to do the Qs as well. You're sitting right on that level. We can all see it. Did you break your neckline? Not yet. It's very hard to see in any universe how you do not break that neckline right now, right? I mean, I think we can all agree on that. I think you can just even use rate of change just to save us the time and see how you have a divergence there already. I think you can see the divergence here as well. And then what happened with that divergence. So at the end of the day, when I'm looking at that, how do I feel about that? I don't see how that holds. I don't know where my leadership is coming from. And you need leadership. And if we start diving into that, we really don't have any. But let's go take a look at that on the weekly. So if we look at this on the weekly, we don't have anything there. As we discussed, we have the lower low. We haven't broken it yet. So this is setting us up once again to go lower. That doesn't mean that you go lower tomorrow. And what you want to do is you want to understand that, and as I've been trying to explain, there are waves within waves of this. Do you really want to be shorting the Nasdaq going into Micron Wednesday night? I don't know how Micron's going to do. I have an understanding of what I think they're going to do. I saw a bunch of upgrades over the past 2 weeks about how strong the market is. I read Taiwan Semi's news yesterday, and that news that I read, I liked it. I liked what they had to say. That didn't mean that the stocks were going to go up today. I do find it interesting that a couple of them were actually up amid this carnage, and we're going to get into that. But if you look at how we're setting up here and you look at how we're cracking, and then you just drill into something as simple as, let's just use something very, very simple like MACD without getting too complicated. And you look at that weekly and the rolling. You can't be feeling like we're just going to reverse here, guys. There's no way that you can look at that and say, you know what, we're going to reverse. And I'm going to take this off here. I'm going to get rid of these moving averages for a moment and look at how we're rolling. You can't look at this and just assume, right, that this is great because we can't break the zero line. It's not great. We've been fighting with the zero line for some time. What I would point out is the same thing. We were much lower than we are now, and the index in and of itself is lower. Therefore, we have a divergence, meaning that the spread between how this is calculated is actually lessening. If we dropped in something like the histogram, let me see if I have that one on here or not. I do. If we dropped in the histogram, what you're going to notice with the histogram is that the histogram is actually less here than it is here. Less here than it is here. So the histogram is actually telling you that what's happening is actually starting to slow down. Whether or not you want to believe it is up to you. Same thing with rate of change. This stuff is telling you that this move down is going to slow down. There can always be an event, but what is that event going to be? We said if we break 14.8, there were other levels to look at, and you can see right now, you're on the neckline. We have to see how we do tomorrow, and then we will go from there. Definitely something that I would be paying attention to. I see the crack right here. I'm looking at the hourly to get through the day tomorrow. That's really it. 1, 2, 3 over and then a break. I see it as well. And I'm going to be real candid. We have no leadership. There's nothing out there that is really holding up. If we just look at the basics and you go, SOX, that's breaking. Lower low is actually following what's going on here. You can't possibly feel warm and fuzzy about all semiconductors, although some held up very nicely today. And I think that's because of Taiwan Semi. You come here and you take a look at the SOX and you see if you can break down here, and that's going to lead us into this one charting piece of research actually that I want to go over. But see how we're sitting right in here? So you're probably going to get to that level. You might want to drop in at 200. I mean, to think that you're not going to test the 200 right now, I don't see how we're not doing that. If I look at SOXL, I bought a little. I thought we could bounce here. We didn't bounce. Trade didn't work. But it was at such a low risk entry, it was worth trying. And that's really the game. And you have to look at this stuff and go, okay, well, the lower low, well, we made the lower low here too. When you're at like January 23 VWAP and you've been holding it, and you're at the 200 and you've been holding it, trying these little shots here, that's really all you have in a market like this. As you try to catch that bottom bounce, some people say, "Oh, I don't wait for that. I don't try to catch that. I wait for the setup." Now, if you wait for the setup, sometimes, guys, I'm just going to show you this. You're not going to come even close to what someone else is going to make. And you might be okay with that. I'm not. But when you have moves like this, you undercut and you get a strong green bar like that, you don't want to buy that or that retest to see if you're going to catch something like this. That's on you. Everybody trades differently, but I don't want to wait for this perfect confirmation that is supposed to be read in a technical textbook. I'd rather go out there and find edge and find a way in. And frankly, assigning a dollar valuation to something that could reverse off a 200-day moving average is not the worst idea in the world, something to consider. Now, you have no support whatsoever, but you're getting to the 200 here on the cloud computing, and we're going to have to see how that plays out. Now, I thought this was really interesting from Morgan, and I wanted to go through it very, very quickly. Morgan Stanley issued this piece today. You can see that. This is from the Global Director of Research at Morgan Stanley. And what they're saying is AI creates a new era for advanced packaging. What they're talking about is their global team believes that advanced packaging pulls high-speed chips at processor cores, leading edge nodes, and keeping the remaining chips at other nodes, which together forms a package. This makes the construction more powerful and quicker to produce. Now you know what packaging is, and can meet the challenge for increasing performance for AI use cases at a reasonable cost. They believe that high bandwidth memory, HBM, which expects to double in the next 12 months. These are the companies that make it, will drive structural different growth and return profile, especially to the traditional memory business. Okay, who's in the traditional memory business? We have a company coming out tomorrow night with earnings called Micron technology that everybody has upgraded. That should be pretty interesting. Our Asia team doubles down on Hynix, which we have no access to, and you also have another one in here. They're picking this AP Memory Technology Corp. Someone told me about them yesterday. These are their top picks in the Greater China semis, and you can see what they're talking about here. Now, does that mean that Micron's going to come out and crush tomorrow? No, it does not. But what it does mean is that these people that are in the know, that are on the ground, are seeing a massive shift and they're seeing massive demand. That doesn't mean that they're going to go up right now, but it does mean over time that they're going to go up. If you watch some of these guys and how they trade, they're looking out years on these positions. They're not looking out weeks. We're going to want to see what they have to say tomorrow about bookings, how they're doing, about their pricing, and how their pricing is going. This is going to be really important tomorrow night, guys. You're going to want to watch this. And Micron takes us right into the next day. You know what the next day is? The next day is GDP Thursday morning. That's why I'm saying if you want to swing trade right now, you're going through a massive shift. And there's a lot of assumptions that we're just going to absolutely, it's so obvious that we're going to crack. I don't know that GDP doesn't come in good enough that makes the Fed go, we're not raising rates again. And this data, and then we watch the bond market rally. If you have calculated GDP, you're ahead of me. I'll just tell you that right now. If you know what GDP is going to be, you're smarter than I am. And I think that you don't want to guess that kind of stuff, because you could see a massive shift, especially when we have hedge funds, the shortest they've been since September 22. And we all know how end of September 22 went for those that were short. Not very well. It was the bottom. Something to consider. So the other thing that I think is really interesting is just what the VIX is doing. I'll get rid of all of this for a moment. And we talked about this yesterday. If you get to 18, you're going to 20. I was off a little bit, and I didn't think it happened in a day. Obviously, you're breaking out. Obviously, this is going higher. This is your nemesis right now if you're buying options. When you're buying options into this, for example, we on Apple today, we bought Apple, or we bought puts in Apple and shorted Apple and did okay. Candidly, I did better with the short than I did with the puts. Sometimes I'll do them in tandem because people in the room will also just want to trade stock, not stock, but they want to trade the puts. So I'll just trade along with them sometimes and just buy them just to walk through it. But at the end of the day, what happened here? We broke down, this phone's not as good as the other phone. We're starting to find all kinds of problems. Okay, that's not great. But there's something that happened here with the stock. We had a level that we were holding, this 173.79. We're not holding it anymore. We sliced through that like butter today, and you can see that level really clearly. So what we want to do tomorrow as traders, and this is where I'm saying that you don't want to hold overnight. You want to come in, see where you're at tomorrow. Nothing's going to be worse than you being short Apple and it comes in and gaps up $2 because somebody defends it. And you know Apple's going to have a bond deal down the line, so somebody's going to want to be a hero. Someone defends it, it gets right up to that neckline, and then all of a sudden that gives us an opportunity to put that trade on. Not here, right? And this is a great example. I think we paid $1.50 for those options. Early in the morning, got out of something like the 190s, but you know, I thought that they could be a home run. The stock's down $2, and I think the options are at like $2. So it's not really even to me worth the risk at how fast the premiums are going to evaporate, especially if the VIX drops. All that implied volatility is going to come right out of the option. So you're actually probably better off being a net seller of options right now, to be candid. So anyway, you're going to want to watch this tomorrow and watch how you act at the 173.79 level and go from there. I think that's really poignant. Even names that looked like they were going to bounce, this bounced right off a firm. I did a day trade on this, and then at the end of the day, it looked like it was going to push, and it just didn't. It gave me a little move. I bought it. I wanted to stay in it, see if it was going to go, and then I wound up losing like 9 cents on it. Amazon news we should talk about. I don't know who's going to come out and defend this. This is one of their key drivers, and this was a great example of what I think, what I'm talking about, and I'll show you. So let me just drop this here. You could buy options on this. You could have bought puts on this. It breaks down 1, 2, 3 coming across, and you can all see that little move right there, and then the break. And once that happens, that was it, right? You can just see it 1, 2, and then you crack right there. Breaks, takes out that low. There's your move. There would be your stop. Anyway, so it breaks down. If you're in here and you're buying options, you better be out here because they're just depleting you in here. Then they rally you up and they're triggering you. And then what are they doing? They're making you think you're fine. And then what do? They roll you right back over. And what's crazy about these moves is these are not huge moves. That's what's even crazier. Like you're talking about $2. You're not even talking. That's if you caught the high to the low. It's $2. So you're not even talking about huge moves here. You literally would have to come in short here, leave it on all day, have no risk parameters when this kicks in, and just miraculously hold that to make any real money. It's not really a strategy, and we all know how that's going to wind up playing. So this is something that I will be watching tomorrow. These do not go away very fast. This is going to be an overhang on the company for some time, and you can see that pretty clearly right here, and you can see that level here that you broke and you never got over again, and so I'll just drop that in here so you can see that. And you can just see how you broke. It's very hard to come back from that, and I think that that's something you have to look at. A couple names I really want to hammer home. 1, 2, 3 up. This was extremely disappointing today. We had puts on from yesterday, and this is what I'm talking about. Got stopped at a half, held half. People did fairly well with the puts overnight. I actually married stock at the end of the day, thinking that we could have a follow through. Didn't work. So even though the puts worked, the hedge didn't work. So it was just basically net by the end of the day, which is obviously not what I wanted, but it is what it is. I thought we could push. I did not want to come in short after reading some things last night. So it is what it is. It happens on the next trade. But I want to be real clear about this. When you start seeing them come for the generals like Apple, Amazon, Google, you're at the tail end of something, right? There's a reason that they have the saying they come for the generals last. They don't come for them first. They come for the generals last. And this is really very critical. Now, if you look at something like Google, you're below the 55. Well, anyone's going to say, well, that's a clearly it's going to break. Well, here was the 1222 cross, and then we broke the 55. How'd that work? Here's another 1222 cross, and we broke the 55. Here we are again. I mean, it's like Groundhog Day if you really look at it right here. And this is where we're at again. I don't know if it's going to hold. I mean, technically, you would look at that and go, you'd want to be short that. All I'm telling you is that the last 2 times you thought that this year, you didn't want to do that. So I would keep that in mind, and I would go from there, okay? Now, if you take a look at Meta, and I think that this was pretty interesting. You're just hanging in there, grinding. And if we just look at the simple things, I'm going to stick with the large caps for a minute here. But if we just look at these large cap names, look at how that held up today. I mean, that's pretty darn impressive to have an inside day on Meta. And it really makes your life as a trader, from my perspective, very easy, because someone's just going to look at that doji and say whatever way the doji goes, the trade goes. You have a gravestone up here, you broke, and now you're here. I just find it fascinating that this is what you're dealing with. I'm going through the big names for a reason, guys, so you can see what's going on. But again, they come for the generals last. If you take a look here, you're sitting around the neckline, same as what? The Nasdaq. Everyone will say it's so obvious that we're going to break. I'm not going with that. I think it's too obvious that we break. And that doesn't mean, again, that we don't roll over. But just to assume that it's going to happen because it happened before is just frolics. So here we are, and we're sitting right there. And if you go through the list, we're waiting for Netflix to crack. And we're going to clean all this off. And did it really crack today? I mean, you're down what, 1%? You're down less than the market? And I think that's a really important distinction. You look at Meta. What are you down today? 60 basis points. I mean, that's not really cracking, is it? Microsoft, that's pretty ugly stuff. You want to short into a support line tomorrow? Or do you want to wait for it to break, retest, and then break? That seems like a better trade. If you don't catch it, you don't catch it. But you might want to look at that, or you just might want to do something as simplistic as go, okay, well, where are any of these moving averages? Like, look where you would have to bounce to in order for this trade to really get itself off. And I think there's a really important distinction there, and that's definitely something that I would be paying attention to. I would be really careful here. Really careful, just automatically just assuming. And then the other thing that I think you have to be real careful about is holding overnight. NVDA is just getting absolutely destroyed, down a whopping 70 basis points today. Nasdaq's down 1.5%. NVIDIA is down 70 basis points. So you start looking at this stuff, guys. You start drilling into it a little bit. Try to get above the 3 to 5. Didn't work. I have a 3 that's starting to point up. Maybe it holds, maybe it doesn't. We don't know the answer to that yet. What we do know by looking at that chart is that you held that trend line, and you held it again today. And there's really no other way to say it. I mean, you're hanging in there. So maybe you hold, maybe you don't, but for now you are. And the longer we're here, the less I like it. And I do think that if you start cracking, it's going to get ugly. And we could absolutely continue to roll, but I don't want to go on that premise. I don't want to put myself in harm's way after the great year of trading and try to figure out what Micron, GDP, and PCE are going to do in the next 48 hours. I think that is absolutely crazy. Some people are going to hit and think that they got it all figured out, and maybe they do. But I would just, this is a really nice time there's a great saying, there's a time to go long, there's a time to go short, there's a time to go fishing. The trades that are working, intraday, you pull money out and you get out of the way. I mean, that's really what has worked for me today. Anything overnight that I did or hedge, candidly, it just did not work. So I have to respect what is working and what is not. SMCI, I'm going to just point out the obvious that it was actually green today. Hit a DTL, was unable to get over this doji here. I'll be watching that tomorrow. That's definitely going to be on the list. Tesla, let's get rid of my 1,000 lines and just talk about the obvious that happened off the open today. And I thought this was absolutely glaring, but you can just see where we opened, and let me pull this line there, and then what happened off the open again. So here's my open, and you can see where this carries straight across. Let me just drop it so you can see it. Right? So here's my open, here that open, test, can't break, test, can't break, opens here, runs, pulls back, holds. You think you have a level at 243? Maybe that's something we should watch tomorrow. You come across, and look at this. So you come across that 243. Let me just drop it so you can see it. I mean, think 243 is something we should be paying attention to? Because somebody's there. They sold into it. Support. I mean, how many times are you going to hit it? So if we wanted to short it, where's the area? Well, if you break 243, you're probably done. I'm just going to leave the 200 in there. But when you look at it from that perspective, where you just drill into it this way, I mean, that's glaring, guys. That is absolutely glaring. So that would be the level I would use. I'm trying to give you specific levels for tomorrow to use. I would also point out and be Captain Obvious, Amgen, something I have a position in. I find this fascinating that everyone keeps waiting for biotech to finally throw the towel in. You're holding support. I'd run your chart scans tonight and look at what names are holding support. Coal does not look awful here, guys. It doesn't. Energy names don't look awful. They really don't. They actually came back, tested their DTLs, downward trend lines, and they held. Look at XLE holding, XOP. You're sitting on the trend line. So I think there's something to that. I went over a lot of specific levels. Please comment below if you have questions, but I do think that there's a lot going on here, and I would just tell you that I would be on the side of caution tomorrow. There's no reason to be a hero. Now, there's too many data points, and there's no way that someone is going to connect all of these data points this accurately in this market over the next 48 hours. It's just, the probability is just not with us. That's it.